Hello everyone, this is Brian Beamish coming to you again, the Canadian Rational Investor, CR Investor on Twitter and TradingView, with your daily Bitcoin summary for Friday, July 4th. Happy US Day and all that. North America has a holiday here, so it's actually interesting to see how that plays out. In Bitcoin land. Canada's holiday was earlier on in the week, July 1st, but the Americans are basically gone for the weekend, and you can sort of feel it coming out of the market here. Anyway, let's try and keep this short and sweet, so let's get to the point and let's look at the charts. All right, here's our, we're going to be doing BTCE as we've talked about at length over the past week or so because I want to be running this PAM service. And actually what I've found and been chit-chatting in the chat rooms and all that kind of fun stuff is if you're trading on the Bitfinex exchange, because they allow margin trading, interestingly there, you often see a lot of stop level runs because it seems to me that the people that are running the exchange maybe tip others off as to where weak hands might be and where they might get margin called. And you often see these sort of little flash crashes on Finex through those levels, whereas you don't really see that on this BTCE because they don't allow the margin trading. So I thought that's an interesting commentary in itself. But anyway, so we're going to be looking at the BTCE, and we'll try and keep this short and sweet. We all know the story. Breakout through 150 last fall. Big run up to new highs. Everybody's rich and famous. Way to go. One scandal after another. I would argue that the market is doing nothing more than just cleaning itself up. But what we found here into the late spring is basically the public had lost interest in Bitcoin. It had fallen basically, say more than half from its peak, and all the people that got Bitcoins in their stockings at Christmas last year couldn't remember where they're using them, or maybe they're using the Bitcoins as door stoppers now, who knows. Long and short of it here, we noticed that through this very quiet consolidation period here, we had a really nice 1 hour, 4 hour long setup. I found it really interesting that this was on the final culmination of this China banning Bitcoin for its citizens. And you could literally watch as the Chinese market, the JOQ public was being sucked out of the market through here. And then, just literally sellers ran out. There just weren't any more sellers. That was the end of it. And any sort of bullish push, and then the fibs start taking over again. So very interesting that that all occurred right into the optimal trade long zone, which is basically where institutions would consider buying. And I think I ought to make a quick note here. For anybody who uses the OTE principle or this optimal trade principle, you really should give credit to Michael Huddleston, ICT, Inner Circle Trader. He was the one that taught it to me. And what I've noticed is that it seems, in my opinion, that this concept has really gained a lot of traction. Here's his YouTube page, Inner Circle Trader. All credit for this OTE notion should go directly to Michael. I mean, he is the guy who came up with the idea. He is the one that taught me. And anytime I make reference to it, I should just have a little footnote. Please refer to ICT. And I would appreciate if those that are listening that use the OTE concept, that you do the same, because Michael really deserves credit for that idea. Anyway, long and short of all this is, if institutions were going to buy, where are they most likely to buy? And that is this green box, and gee whiz, what a coincidence, price bottomed in there and took off. All right, so that brings us a little bit more to the present. If we were going to look for a rally, where are some likely rally pivots? If we believe that this is a bottom, and really these railroad tracks and then this quiet period of consolidation lead me to believe that it is, then what's a likely upside target? And the answer to that is the OTE going the other direction. So that's 806 up to 900 and change, and really that wouldn't surprise me. That would just basically bump up against all these old highs. You can see there's lots of retail people that are involved in this area. So, you know, if we do get up into that area, I could imagine a lot of retail people would be like, phew, thank goodness, get me out of this thing. I never want to buy another Bitcoin again, yada, yada, yada. Anyway, on top of this sort of concept of OTE, I'm a really big fan of the 38.2 fib, or what we call our first stop target. And interestingly, this 38.2 also lines up well with a 50% retracement of the year-to-date range, which I made reference to lots in my earlier videos. I haven't really made too much reference to it because I don't have enough time here. Anyway, point of the matter here is that we had a nice bullish ABCD pattern that also coincided with the 38.2. That painted a target up in this 600, 6.25 area, and gee whiz, you can see 200 periods simple moving average was right up there too. So not a big surprise to see us sort of pause here. And you know, really, one should, you know, if you're a believer in 38.2s, and which I am, then once we hit this significant one here, one should probably ask, okay, what's a 38.2 going the other direction? And sure enough, when we draw off of this high down to the low, there's the 38.2, that 546. So let's zoom in a little closer here so we can take a look at that in earnest. And we see how the market just basically came right down off of that 38.2 and snapped back away from it. And the encouraging thing for the bulls is, number one, if a market can bottom off a 38.2 and then continue its extension, that bodes very well for you know, the technical picture. In this case, it's the bullish picture. Conversely, I suppose you could argue that if we rally up to 38.2 and then fail here and break down, that bodes very bearishly for Bitcoin going forward. So we're at a very interesting stage here. This sort of bracket in price is very interesting tell for the market. My hunch is that we're going to work our way up into the OTE short sweet spot, and I wouldn't be surprised if this happens through the summer. But you know, you never know with the market. The market can do any old darn thing that it wants. Interestingly, you know, here's our harmonic pattern again. If we do get a bullish resolution through here, and it sure looks like it's trying to, then this is a bullish ABCD. And that happens to paint a target for that bullish harmonic pattern right at the bottom of the OTE range, or this 61.8. You've heard me talk lots about 61.8. That's Mr. Mountain Man's favorite number. He's going to short this come hell or high water. It doesn't matter. The tag of that, boom, he's short. Done. You know, it lives by those fibs. Conversely, 61.8 on the downside here, 465, boom, he's bought that. You know, no ifs, ands, or buts. It's just that's Mr. Mountain Man's trade. But anyway, it's kind of a funny anecdote. So the point of the matter here from the daily charts is that we did hit some key levels on the way up. We're consolidating, and we're trying to figure out now whether this is really a long-term bull in which we'll hold these levels and head higher, or whether this is still a correction within the bear market, and at which point we need to put in a weekly bottom and come down into this OTE zone, and we'll see how she looks here. So from the daily perspective, we've hit some upside targets, and I might even argue daily traders should just be sitting on the sidelines until we resolve this. All right, let's zoom in a little bit closer, and here's the 4-hour chart. Here's the bull ABCD that we talked about, painting a target here up in the low 800 area. Here is the fibs off of this rally here. 38.2 takes us back. Actually, this is off the entire range, all the way down to the 340 low. 38.2, basically right where the market came back to. Here's the OTE zone. If I was an institution, I wanted to be a buyer of this move, where would I most likely want to buy? And that's this area here. And I have been commenting for a while now that this potentially looked like a bat formation. There's more harmonics, price comes down to a key fib level, rallies back to the 50% level, comes back down, tests these lows in earnest, holds. You also notice this is a cup and handle formation. We've been talking about that for quite a bit. Both of these concepts, the bat and the cup and handle, painted a pretty good target of this 88.6 fib, or about 654, somewhere in that area. And I find it incredible. 654.41 is the 88.6, and we got to 654, what was the high here? 654.38 within 3 ticks of that high. That's incredible. Anyway, one could argue that there was, a bat trade where you actually hit that level and you risk to new highs. That didn't come in itself, but long and short of it here, had it come in, downside targets first off would be this 38.2 fib, and second would be the OTE long sweet spot. So what have we been doing in the interim? Well, it turns out that we rallied up into this target area, cup and handle, bat formation, and we put in a very tight little top here. And you'll notice this is the double top within double top scenario. Here's that rally peak. Here's these important fibs, these harmonic levels. There's the 41, so it's incredible how we came so close to that. And recent commentary I'd suggested that we might get a wash of these highs, just to satisfy those. That really wouldn't surprise me. But having said that, market's going to do whatever it wants to do, and the market decided to put in a top. So here's a double top within a double top. We rallied up, came back down, rallied up, then came back down, then rallied up, and then broke down. So we had two pretty good short levels here, and you can see market broke down, gave you an opportunity to do the trade in the window, so it's not like you could say, oh, I just missed it. I mean, it gave you the opportunity. It ratcheted down, came all the way down to 522.33, and here's our target, 622.35. Here's our target, the 38.2 fib, 616.41. And as well, the double top within double top, I really like to use the 50% level, 619, basically in this window that I've painted as the reward. Here's the original risk, and here we are 3 days into the trade, and the trade is still working. I mean, it's driving me nuts. But nonetheless, good traders are nice and patient, and basically here's the short notation. Here's the risk reward, here's the targets, and here's a note that basically you should have your open order sitting here working. So I woke up this morning and I can see lower highs and lower lows, basically confirming my general feeling that we're working our way down to this 38.2 and the 50% level. Here's the OTE off of just this range here, which we're using for the 50% level target. And what a coincidence, Mr. Mountain Man 61.8 is sitting basically right where the 200 period moving average is. And we also have this trend line here too that goes back over time. So, I still hate to say it, it drives you nuts, but the long and short of it here is that the short setup is still working. I suppose, we talked about moving stops along the way. I know one guy, in fact, it's Mr. Huddleston, he talks about moving your stop to the third previous peak. So I suppose you could say one peak's there, another peak's there, another peak's there. So we've gone from having stop up here to having stop up here to now having stop up here. Really, my feeling, and I've just said this all along, is I think I just want to stick with the original risk-reward parameters on the trade. And if it works, great, wonderful, we look like geniuses. If it doesn't work, well, next bus is along in 10 minutes. As I pointed out recently, I've been on a bit of a winning streak lately, and the last 4 setups have all worked. So ironically enough, I'm kind of anticipating that this setup doesn't work, so we can at least bring the statistical model back into norms. For the record, I feel that my setups work about 70-75% of the time. So if we're batting 100% right now, if anything, by definition, I'm kind of looking for a couple losers here just to, like I said, bring us back down in line. But having said that, long and short of it here is the trade is on, the trade is working, and as disciplined traders, we just got to sit here and bide our time and be patient and wait for our levels. So that's basically today's summary. Just last thing I would point out here, you can see OBV broke down hard here, so we're not getting any help there for the bulls. MACD tried to bottom here, and we had this little bit of a bottom within this massive formation, and that's failed. And Willie still isn't stupid yet, so we're sitting here not above the oversold zone, so there's no real reason for me to panic and think, oh my God, this is the bottom. So it's just a big hurry up and tread water. So that's today's summary. Hope you've enjoyed it. I don't know how long I was. I tried to be as thorough and as complete as possible and as quick as time as possible. Have yourselves a great long weekend. Obviously, you can see with the weekend trading, the holiday weekend here trading itself, the volatility is coming out of the market a bit. So put it all together, and it's just sort of, enjoy the weekend. Yes, the short setup is working. No sense in tinkering with it. Stops are where stops should be, and just hurry up and stay the course. So probably do a Saturday show tomorrow, and that's a little bit longer. Maybe I'll have a guest. I don't know. And I'm totally stoked about the School for Bitcoin Traders coming up here in the next week. So you can always inquire about getting on the waiting list. The classes are full at the moment. But you can always inquire about getting on the waiting list, or even pre-registering for Q4 2017's course, which starts in October. All right, have yourselves a great day. All the best, and we'll talk to you again. Bye now.